The newest EV company going public is XL Fleet. We have a new EV company to take a look at today. XL Fleet is the newest electric vehicle stock that's going public through a SPAC, which is a special purpose acquisition company. And in this video, we're going to evaluate XL Fleet, go over the company, what they do, what products they create, take a look at their financials, and determine if we like this company and if we believe they're going to compete with the other major electric vehicle manufacturers that are already on the market. So this is XL Fleet, the newest EV company that is planning to go public through a special purpose acquisition. And if we take a look at this article from Barron's, the title is, "This EV stock is going public. Unlike Nikola, it has sales." So this EV stock is actually generating some revenue, and this company has high revenue growth expectations over the next few years. So XL Fleet announced that it is going through a SPAC with ticker symbol PIC, and after the shares come together, they combine, XL Fleet will be publicly traded under ticker symbol XL. So Pivotal, this SPAC company that they're going to merge with, their shares surged over 20% after news of this merger came out. And this is the newest SPAC to hit the market. If we take a look at PIC stock, of course, this is the special purpose acquisition company that is going to be merging with XL Fleet in order to create the publicly traded stock. They were trading around $10.50 a share. The day of the announcement, they saw shares jump over 27%. And since that point, they've been trading somewhere around that level of around $12 to $13 a share. So if you want to get into this company before the merger, ticker symbol PIC is a stock you're going to want to take a look at. So XL Fleet is another electric vehicle company going public. And in this video, we're going to evaluate the company, go over their financial statements, take a look at the actual products and the customers they have right now, and determine if we believe it will compete with the other major EV brands. As you know, everyone, I am the Gen Z investor, and every single day we talk about the stock market. We go over different stocks you can buy. We talk about big stock market headlines and news events, like we're doing today with this announcement of XL Fleet merging with PIC in order to go through a special purpose acquisition and have their shares publicly traded on the market. So essentially what this company does is they provide both hybrid and plug-in hybrid technologies to transform a factory-made vehicle into a more efficient hybrid by adding an electric motor, an advanced lithium-ion battery pack, and control software. No other significant modifications are made to the vehicle, and they're not required, and no changes are made to the internal combustion engine or transmission. So they're making alterations to a vehicle in order to add a hybrid or plug-in hybrid technology to the existing vehicle. So this is a very interesting type of company. This is kind of a new technology that we haven't really seen yet on the market. They can go into all the Chevy Silverados, GMC Sierras, and of course the highest selling pickup truck in the United States and throughout all of North America is the Ford pickup trucks, and they can actually go into a Ford 250. And of course they have the other different vehicles all the way from class 2 to class 6. So they have, of course, the most popular vehicle actually being sold in the pickup truck market is the Ford F-150, and they have that available as well. So we're going to jump into their investor presentation to kind of go over what this company is and how they're expecting to grow. So of course, they're in a market where there is an insane amount of demand for sustainable solutions. The EV market is only going to grow, and it's barely even reached a small percentage of the overall global demand. Currently, they have over 200 customers. They have over 3,000 of their systems deployed into vehicles, and their vehicles with their systems installed have driven over 130 million miles. So their customers have driven over 130 million miles using their products and services, which is incredible. This company has a track record. They have proven usage on the market from some major brands and over 200 different customers. So of course, they do have a broad portfolio of cost-effective solutions for various different vehicles in different class sizes. And you can take a look here at all the different vehicles in different class sizes they offer. They have the pickup trucks, the larger vans, and of course, they're also planning to do buses like school buses and of course, public transportation buses. They have an established production that can actually scale to over 100,000 units annually, and they have a very capital efficient operating model that they believe is ready to scale as demand increases, and it will help drive profitability. And they are uniquely positioned, different than all the other brands on the market, as they are positioned as an electrification as a service. Of course, they are modifying existing vehicles on the market. If we take a look, this is what they believe, how they compare to the other SPACs or the other EV, more speculative companies on the market. So projected units sold in 2020 is the dark blue. XL Fleet plans on and expected to have over 4,200 units sold in the year 2020. And if you compare that to their main competitors, the other special purpose acquisitions and the smaller EV stocks, you can see here they are destroying the market. If you compare it to what they're expecting to do in 2021, they're expecting to more than double units sold and once again crush their expected competition. And they're even evaluating that Workhorse and Lordstown Motors are going to see some beautiful growth as well in 2021. They're just expecting to outpace those. They of course have more models available for their EV products, and they have established production and are expecting over 1,000 plus units per year over the next 3 years and beyond. And they have a customer base of over 100 customers over the next 5 years as well. And you can see here how they stack up their estimates versus their main competitors. They don't believe any of their main competitors will have over 100 customers until at least 2024, which of course is close to 4 years out. They are also describing themselves as a market leader in fleet electrification. They have over 10 years of experience. This company has been around a long period of time. They have over 200 active customers. Like I mentioned, over 130 million miles driven and over 3,000 vehicles on the road. So that just shows that this company actually has vehicles. It is proven, their products have been tested, and there's actually getting usage out of their products on the road today. Very different than a lot of other of these SPACs that really haven't even sold a vehicle. There's a couple of these SPACs on the market right now who's really all speculation. They haven't even sold the vehicle. They're working on prototypes. Their operations aren't fully running just yet, and people are still hyping those companies up. And this company is trying to diversify itself and make it very clear that they are not like those other companies. They have proven operations. They have cars being driven on the road, and that they believe they're a standout amongst the crowd. They have a diverse base of customers operating over 1 million vehicles globally. You can see here some of the main postage and transportation companies like Canada Post, DHL. They have also some of the largest companies that sell a lot of products across the world, such as Coca-Cola and Pepsi, and a bunch of other different smaller companies and some large names like FedEx and Verizon. And they actually see individual orders per their units growing year over year. So the largest annual order for number of units in 2018 was 234, up to 350 units in 2019, to up to around 1,100 units in 2020. Now if we jump into their fundamentals. So the first article we saw from Barron's says that this company is different because it actually has sales. It has proven numbers to show that this company is a real company that's here to stay. And in 2019, they had $7.2 million worth of sales and posted a net loss in that same year. A gross loss, in that same year. If we take a look at what's expected for 2020, so the year is not done, but they're expecting to triple their revenue. From $7.2 million in 2019, they're expected to close the year with around $21 million of revenue, which represents 192% year-over-year growth. And they're actually expecting to post a positive gross profit within the year 2020. And over the next few years, of course, these are straight estimates. These numbers, of course, everyone can be optimistic with their estimates. And this is the company itself in their personal financial presentation. So you know they are going to be more optimistic than pessimistic when creating these data. But you can see here, they're expecting to more than triple revenue each and every year for the first 3 years. And then from there, they expect to post over $1 billion of revenue in 2024, which implies a 6% penetration of the North American Class 2 to 8 commercial vehicle market. So every single year, they're expecting over 100% growth. Of course, these are straight estimates. There's a lot of things that have to go right for this company in order to achieve these numbers. But if they are, I believe the stock will see very fast growth if and only if they can maintain and actually achieve these high revenue numbers. Their margin percentage, if we take a look at the bottom, they don't expect to see a positive margin until the year 2022, and over time, that margin will continue to grow, and by 2024, they will have a nice, healthy margin of around 22%, once again, if everything goes as planned. And of course, they're expecting to bring in $350 million of cash, where they are going to diversify and use into a bunch of different sectors of their business. $25 million to scale for core profitability. They're going to do some product development, international expansion, and of course, corporate development. So a lot of very good uses of that $350 million in cash. And that overall is going to help fund the business and of course, help it grow. So XL Fleet is a new interesting company. Very interesting because they're transitioning and they're making modifications to already factory-made vehicles. And of course, they're focusing on fleets. XL Fleet, they're trying to get companies as customers who own and operate dozens and dozens of vehicles in the same company. So they want to try to get contracts for these large companies where they can put their products into about, just say, 50 plus vehicles per company, and that'd be their goal. So very interesting company, the newest EV SPAC going to hit the market. We don't know too much about them right now, but we took a look at their fundamentals, saw this company kind of what they do, how they generate some revenue, and the fact that they actually brought in over $7 million of revenue just shows that this company has some type of track record in the market. We'll have to see what's going to happen and how they perform moving forward. But that was just news, kind of share with you the new EV stock in the market. So thanks for watching, everyone, and I will see you in tomorrow's video.